Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, April 26th, 2022. Interesting day again. The S&P again starting here on the daily. I'm just going to jump right in because we do have quite a few things to unpack. No changes, except that the completion point for minute wave 2 is now in. And minute wave 3 is well underway. And Microsoft and Google reported. And Microsoft initially was down, then it was kind of hanging around unchanged, and now it's up 17, and they're continuing to buy it. And they're being backed by Google, which was down 150 from the close, now being down only 50. And it's kind of jumping around because the 50 just went to 58 and then a year. So they're moving both of them around quite a bit. And whether it'll hold or not, who knows? It could turn into another Tesla, which by the way was down 121 today after we loved their earnings from last week. So it takes a while for it all to settle in, and then everybody goes, nope, not worth it, and they all jump or ship. In any case, we are getting that bounce. And so one of the things I had mentioned in the NASDAQ commentary was that, yep, I do expect additional downside, but beware of the bounce, or be aware of the bounce. They are going to happen, and here we go. Now, how high or how far, I'm not sure, but let's start to unpack what took place. For that, no changes to the larger count, folks. We're still dropping in the larger intermediate third. We're now dropping in the minor third, and that's continuing via a minute third. So truly, we're in the three of the three of the three. We're in that point of recognition, right in the middle of it, where traders, funds, everybody who participates within the markets now begins to say, it is going to happen. So that now gets to be digested. What I will add at this point is that the Elliott continued to show us the more than likely the high probability path that the market would take. And as we were looking at that last week, figuring this thing's going to drop, it really became apparent and really tossed what was coming this week into how's that all going to work out? How's that going to happen? And what that truly meant to me was the fact that the markets we're looking for these types of responses where they just jack up a stock price and they jack up the future. And we're getting it. But how would that fit into the larger picture? And I think it's just a bounce. So with that in mind, dropping down to the hourly chart. Of note, the minute wave 2 came in under minimum expectations. What that tells us is weakness. There's weakness in the market. And I just want to show the daily, and I'll go back to that hourly. If we look at this daily chart, that is today. That is that's more than engulfing. It's already engulfed the bounds. The bounds would have to go so far to prove itself worthy of anything other than a quick glance on the daily chart. It has to move, and I don't believe that that'll happen because Microsoft and Google, yes, they're big megacorp companies, but I don't think that they're going to be able to withstand the axe that's gone and starts to fall and tackle the buyers. In any case, back down to that hourly chart. What does it tell us? What's going on? I want to start adding some Fibonacci. The first we're going to add is for the minute third wave. And for that, I am going to put in the extensions that'll give us the relationships between waves 3 and 1. All right, that's 4303. Come on, where are you? Where's that high? Right there. All right, I'm just going to do that. So this one, right now, we have gone through the 50% mark. We have gone underneath minute wave 1. So that's a good sign. I don't think so. What would come up next is intermediate wave one. So we have more important support coming up that will truly, I think, if we break it or when we break it, will give us a much harder push lower. Then we'll begin to see how we're going to get ourselves down to here. But again, minute 3, we have exceeded and now regained the 50% mark retracement at 41.46. So we went through it. Now we've regained it. Now we're above it. It isn't propelling itself with the greatest of ease. So SP was down a lot more. Now it's down 9. The NASDAQ was down a whole lot more. Then here it was down another 150. So it was down a total of 200 at the close of the after hour. And now it's only down 54. So again, bouncing around. I think it's just hopefully just people that actually trade Google and Microsoft needing to make adjustments and not just this folly of like, well, we're buying because we're all turning bullish. That, of course, is not happening. It may be happening in Microsoft and it may be happening in Google, but I think it'll be short-lived as it was in Tesla thus far. Now, that does not suggest, what I'm saying does not suggest that Google or Microsoft are not fabulous companies. They are. They will remain strong corporate leaders within the sector and within the NASDAQ. We all are going to participate in what's going on. Again, I direct your attention to the pecking order, and what sits at the top is interest rates. You adjust interest rates either way, and it rolls down. Everybody gets to have the effect of what's happening when interest rates go up or go down. So first up, we got bonds. Second up, you got the dollar. Third up, you got equities. And so now, so I would continue to believe that it's not the companies, it's that we all get to participate in what's coming. And that is, according to Duetsche Bank, a recession. And so they're now calling for that, mild as it may be, but definitely a recession. So, this is what happens in a point of recognition. You're going to get more of that. Now, what the market players want to do here by saying, oh, yeah, we believe in Microsoft and it's going to carry us to the end of the world, I think can be a folly. I think that no matter what, Microsoft still made that money, but they're still, I think, they will decline. They will not stand outside of reality. And like, well, okay, we had great earnings. We're just going to go up against a declining market. It may happen a day, but it's not going to happen consistently. It's not sustainable. Microsoft cannot and will not sustain the entire US economy. Not going to happen. So what can we look for here on this hourly chart? We have continued support of 4109, and then we break. And then the next support's not that far under 4,081, 4,056. But here is where I think that even that minute wave 3 will find its support to complete. We have continued levels all the way down to 37.90 to 92. Should minute wave 3 decide to come in at a level that it quite often those third waves will, and that's 1.618, and that's at 3,800. So we have that potential. It's sitting right there staring us in the face. So, but now coming off, we have the completion of wave 3, and we have a minute 4 and a minute 5, which in turn will complete the minor 3. So 1, 2, we're in that third. If it comes down to here or down to there, makes no difference. It does just point-wise. And then we have a fourth and then a fifth. So actually, if the minute third came down to here, minute 4 and a minute 5 brings it down to here, and we're finishing the minor third. Then we have a minor 4th and a minor 5th. Now, let me go back up and put in the next one, which is we're going to layer in the minor third. So we can take a look and see where we have overlap coming in. And come on, I'll put it right there. Right there. Now, again, minor third here on the outside, minute third here on the inside. And we'll go from there and we'll see what lines up. We have the minor three lining up actually at 4,062. So, and that's the 1.618. So the minute's got a lot more guts than this. So I'm going to say that is one area, but that I don't think is going to finish the whole thing. So I think even on the minor level, we're going to have to come out to here. And this will have to be reformulated because I don't have enough. And we're going to be talking, 1.382, 1.618. Now we're coming down to 2.382 is at 3,800. And that's where I think that this whole third and then the minor third are going to end up. And that could be to be determined. And then on top of all of that, we do have the intermediate three. And it was that intermediate three that we were continuing to look for 3480, I believe. So again, everything finishing up there and then putting in an intermediate wave 4 correction. So we still have a little bit of ways to go. Ultimately, I'm looking for the first leg down to complete a primary A wave to bring us down to here. And actually, that's going to be gone. We have this up next in there as well. But ultimately, I think we come down to here to finish primary A. So again, 1, 2, we get a 3, we get a 4, and then we get a 5. I think the 5 brings us down and likely will bring us down past, maybe down to 31. And we'll see what happens after that. But here is stronger support, stronger, longer term support, 2174. All right, back up. What can we expect for tomorrow? Bounces. Look for those bounces. They're going to try to buy up Google. And I don't think they're doing it because they think Google is wonderful, but they're just covering. Now there's a lot of adjustments that need to be made no matter what. Now let me go back here. For tomorrow, bounces should be expected. We have, come on. I'm not sure why the mouse and the key and the pad do that, but they do. All right, so we have the 4 right here, 4169. That's what we're kind of buffeting up against right now. Then we have the 8 at 4197 to 4200. Then we have the 20, more importantly, at 42, 29, 30, right in that area. So from 27 up to 30. Now, I would expect, since I'm still looking for a lot more downside to complete this minute 3, I don't necessarily want to start backing this up when I don't have to, and I still don't think I need to. I still think this will come through. Tomorrow we have PayPal and Facebook. So again, they're moving all of them around based on what one company did. They think, well, then there's got to be something else. So that must be good things, because if they did okay, then this is going to do okay. That is okay. That's okay. So let me just show you. Facebook was trading at 74. Now it's trading at 77 because this is picking up. And now see, one will just feed the other. Oh, you better go take that because look, it's getting closer. So this is how it works until we get a larger group. They're saying, okay, thanks, boom. So all things considered, I still believe we have additional downside. We get a little bounce in here, and then we decline again. So I'm going to end it right there. Continue to trade smart. Use your moving averages. Use the Fibonacci. Use the Elliott. They help you on your entries and your exits, and setups are cleaner when you include them. All right, our next update will be on Wednesday, the 27th.